This video is a continuation of the point of interest or area of value video which I started some days back. If you have not seen that video, go check my archives and then watch that video, then come back here. In this particular video, I'm not going to be biased whatsoever on any trading strategy. If you are trading indicators, you are trading trend lines, support and resistance, SMC, it's none of my business, okay? I want to simply show you how you can use all those information to profit from the market. You don't need to create a group and say this group is better than this group, this strategy is better than this strategy. As long as you make money, that is the most important thing. Now, let me further explain areas of value or point of interest. Your point of interest could be in form of what? Trend lines. Okay, what it means is that if price trade to the trend line, that is the area of value for you, and you want to see if you can take what? A short trade to the downside. Point of interest, okay, or area of value. A point of interest could be a support zone or a support line where you want to take trade once price come back to the support, okay. That is a point of interest. A point of interest could be an order block, the last bullish candle before the push up for a bullish order block, and the last bearish candle before the push down for a bearish order block, though the concept is more than just what I just explained. So what are you looking for? You're looking for trades as price come to the order block, and then you want to take this trade to the upside. These are point of interest. Your point of interest could be a fair value gap. A fair value gap, that is the white spaces on your candle. When you have a bullish candle like this, for example, this spaces here is your fair value gap. You can decide to use that as a point of interest, meaning if price come into it, you want to sell for a bearish fair value gap and you want to buy for a bullish fair value gap, and so on and so forth. You can even use indicators, maybe moving average. You want to use a moving average. If price comes to the moving average, you can buy or you can sell. I'm not here to criticize any strategy. I just want to let you have an understanding, because this will help you when it comes to liquidity. These are simply area of values. There are a lot of traders in the market, and everyone have a particular strategy they trade in order to be what? Profitable. And those strategies, adding them together becomes liquidity. I will talk about liquidity in my other videos, but today I want to put more emphasis on the point of interest. Okay, now the strategy I'm going to teach you is in line with what? SMC. I'm not saying the trend line do not work or support and resistance do not work. Recently, I have a way of trading my support and resistance. Yes, I trade support and resistance. Okay, those in my VIP area know the kind of support and resistance that I trade, and I've been teaching them for the past 3 months now. Okay, so if you are interested, check the link in the description, come in and join, and then have a different way of approaching the market. By the way, this strategy is over 90% win rate. All right, so let's continue. We are going to look at the order block as a point of what? Interest. What is order block? Order block are simply a series of bearish candles before they move up, consecutive bearish candles. If you have 3 of them, then those 3 candles are your order blocks before a bullish move to the upside. This could be 5 candles, okay? I'm just tired of drawing these rectangles. So your order block are simply this move down, because what order blocks needs to do? Order blocks needs to do 2 things. It needs to take liquidity, move down, manipulate, and then it needs to create a fair value gap. Okay, when the push goes up, you want to see a fair value gap. That is for a high probability order blocks. That is for a high probability order blocks. Within that point of interest, now we have this whole zone as a point of interest here to here. Now, obviously, you will not be taking trades here with stop loss below. That is only if you are trading the second base time frame. because within the second base time frame, this could be just 3 pips. But let's assume you're looking at a daily or 4-hour time frame and you have 4 candles like this. You will not be taking trades here with stop loss here. Not that you can't do that, it's just that it might affect your emotions because price may decide to go low and test this one before moving. So every point of interest, you have what is called refinement. When you hear a lot of people talk about refinement, what they are saying is simply, I have this very big area of interest, but obviously I cannot use that as my trade setup. Okay, so what I need to do is to refine this trade to the last bearish candle, and this is what most people teach as order block, the last bearish candle before the move up. What are they doing here? They are simply refining these entire levels or areas to a very small area that is that you can take the trade to have a higher risk to what reward. For example, if you take this trade there and it's successful, you are going to have, you risk this amount to make 1, 2, 3, 4, more like 4-hour risk to reward. Unlike you trading without refinement, you can only risk maybe 1 to 1 or 1 to 2. So the reason why most people refine is to have a better risk to reward and also to have a better quality trades to reduce your emotional stress. Yes, drawdown creates emotional stress. You look at the chart, market is still moving down, especially printing candles up onto this level. By then, most people will just, if you have a weak mindset, you are going to close that trade manually because you don't want to lose your entire money. But if you understand how this thing works, you can use refinement. So if price comes to this region, you're not taking a trade. If it comes here, you're not taking a trade. You want to wait for price to come into your refined zone. That's where you initiate that trade. Okay, and then you watch as price do its thing. Either takes you out or give you money. I'm not here to talk about entry. Now, the other thing people do with their point of interest is what they call confirmation. Most people want to see a confirmation that this point of interest will hold, and that is all about entry anyway, but I'm going to touch on it because I'm already talking about entry here. There are 2 ways you can enter this market. Either you enter more like a risk entry. That risk entry doesn't mean it's a low probability trade. Okay, risk entry in the sense that that's the name given to it. You are taking the trade once price comes to your point of interest. Then the confirmation entry is you are looking for any form of confirmation. Okay, for example, those that trade price action, for example, here, this is your support and resistance. Now price is coming in here. The risk entry is for you to take the trade here. Okay, and then put your stop loss somewhere here. That is risk entry. Now the confirmation entry could be you want to see price rejection and then probably an engulfing candle. So once you see the engulfing candle, you can then say, okay, I've gotten my confirmation that this price wants to go higher. Then you take your trade with stop loss below. That is the idea. It's not only in SMC you look for chalk. Like in SMC, the confirmation is most people look for chalk. Okay, they look for chalk. But I did a video here on the liquidity sweep entry strategy. That is also a very good confirmation because instead of you looking for chalk, why not look for take this trade. This trade here will have given you that liquidity sweep entry strategy I talked about in that video. If you have not seen the video, check my videos and you are going to see it. Watch it. Okay, there are different ways. With my London trading strategy, where you have that line drawn, you can wait for confirmation at rejection. I just want to see price rejection on this level. Okay, price touch it and then reject. That alone is okay for me to confirm that this trade is going higher. So in that case, once this candle closes, I can take the trade, stop loss below, and then watch as price move. Those are confirmation entry. In SMC space, when they hear the word confirmation, they are all looking for chalk. No. Be an hybrid trader. Do not throw away trend lines. Do not throw away support and resistance. Become an hybrid trader. An hybrid trader is simply a trader that trades SMC in line with other strategy. okay, because there is no one way fit all. Learn how to understand price action, okay, because SMC is just another price action. In fact, if I'm to categorize price action and SMC, price action comes above SMC concept. So do not throw away rejection candles, do not throw away engulfing candles and every other candle patterns that you know. Okay, use it in your advantage. So now we have refinement. You have to refine this point of interest, or you look for confirmation within that point of interest, as the name implies. Okay, regardless if you are trading with indicators, you are trading with support and resistance, you are trading with trend line, you can look for refinement. Okay, refinement can also be done in form of what? Going to the lower time frame. Okay, like this example here, the daily time frame. You can go to the lower time frame now and look for refinement. Maybe go to the 1 hour. The 1 hour point of interest or other block in the 1 hour will be smaller. I'll look at the example next. Let's look at this. This is the monthly chart, okay? And this, let's say, this is the other block. These are other blocks, okay? But let's assume, let's just refine it to this one, okay? Maybe half of it. Normally you have to take the entire one here. This is the other block, the bullish candle before the push down. But let's just reduce it to this point. So here, how do you refine this? You can refine this by, this the entire other block. It doesn't make sense to take a trade here and stop loss above. You refine here. This is refinement number 1. Refinement number 2 is to go to a lower time frame. Okay, within that lower time frame, you can see we have other blocks here, all of this. Then you can refine it to the last other block here, this candle here. Have you seen refinement? Okay, that is how refinement is being done. Okay, you can either refine on the time frame you are looking at that point of interest, or you go to a lower time frame to refine that particular point of interest. So I can see this was a kind of sniper entry, okay, on the weekly time frame. The same thing can be done on the daily. Okay, market is fractal. For example, let's say you want to take a trade here for some reason. You want to take a trade here. Now, in this case, you don't have much refinement, but this is the only candle, or probably you look at this entire other block, then you refine it down here. Okay, if you go to the 4 hour, you are going to see you can refine it down to the last other block here. This doji price came in and then push up. Okay, that is refinement. Now the confirmation is you want to take this. Maybe go to the 15 minutes. You are waiting for a shift in market structure, which you get somewhere here. Okay, you've gotten it here. So that is the shift to tell you that the market will go higher. Then maybe at the pullback, you take the trade and move on. That is confirmation. I will teach you more on entry later on. Now, the other type of point of interest I want to talk about is supply and demand. Okay, from my own understanding, most point of interest lie within the supply and demand area. A supply are simply areas where selling order came in to push the price down, and then demand is simply areas where buying pressure comes to push the price up. So when price comes to that level of supply, for example, this could be a level of demand, you want to take a trade in here. And the refinement can also be done using this or confirmation. Okay, those are the refinement you can do either on that time frame or in the lower time frame. Okay, just like if you look at, let's look at the 4 hour chart here. Now you can see this supply zone here. This is a supply zone. I can either take a trade here for any reason. If I analyze this market and I say, okay, this market is bearish, I can take a trade here on this supply zone, or I go to the 15 minutes and refine it. You can see we have This zone gives us how many pips here? Over 19 pips. Okay, but I can refine it to just this level here, and this gives us how many pips? 8 pips. Yeah, slicing it into half. That's what refinement does. Okay, in this case, you are refining off demand and supply zones. Okay, so those are the things you need to know when it comes to your point of interest. You have to know how to refine your point of interest. You have to know what to look for, how to categorize your point of interest. If you have not seen the last video before this one, I talked about how you give your point of interest different probability in terms of high, medium, and low. And in this particular one, we are looking at how to refine your point of interest. Okay, my next video will be on liquidity. Then after that, we look at entry. Okay, so make sure, if you are new to this channel, make sure you like this video, subscribe to the channel, hit the notification bell, so that when I release more content like this, you will be the first to be notified. On that note, I will see you in this video.